Gas prices are skyrocketing, inflation is rampant, and Palantir just sent shockwaves through Wall Street. You can't afford to ignore this. Today, we're immersing ourselves in the dramatic world of U.S. stock markets and the ever-evolving landscape of artificial intelligence. Hold on tight, because these shifts are shaping more than just the financial pages. They're shaping our future. Let's kick off with the headline that's got everyone talking: the record surge in gas prices that's fueling a sharp rise in U.S. inflation. According to the Honolulu Star-Advertiser, this spike is unlike anything seen in recent history. With gas prices soaring, transportation costs are up, impacting everything from groceries to Amazon deliveries. It's a domino effect, and it's beginning to take a toll on consumers' wallets nationwide. Inflation isn't just an abstract economic term, it's impacting you directly. As prices rise, purchasing power declines, which is why inflation is known as the silent wealth killer. For investors, it means reevaluating portfolios to include assets that traditionally perform well during inflationary periods, such as commodities or real estate. But what does this mean for tech stocks, or better yet, companies that intertwine with artificial intelligence like Palantir? Speaking of Palantir, something remarkable just happened to its stock. TheStreet.com reports that Palantir has made a strategic pivot, sparking volatile reactions among investors. Initially designed as a data analysis tool for government agencies, the company is now diving deeper into commercial applications, powered largely by AI advancements. This marks a significant transition as Palantir unlocks new revenue streams potentially. However, with this shift comes increased scrutiny as their AI applications are untested in more consumer-driven markets. Investors noticed and reacted, leading to a 1.86% drop in its stock price today. Yet for those who believe in Palantir's innovative vision, this could represent a buying opportunity driven by long-term potential. Now, here's a cliffhanger for you. As tech companies like Palantir push boundaries with AI, they enter uncharted territories. But who will seize the lead in this AI arms race? We'll dive deeper into that shortly. Stay tuned. In other important news, Sam Altman, a prominent figure in AI and CEO of OpenAI, had a terrifying experience as his home was attacked with a Molotov cocktail. While this may sound like something from an action movie, the Wall Street Journal confirms this story is very real. The suspect is now in custody, but this act of aggression sends ripples through the tech community. It underscores the heightened tensions and controversies surrounding AI development. As these technologies advance, they not only promise revolutionary benefits, but also raise ethical and security concerns, creating a complex landscape of risk and reward for investors and stakeholders alike. Let's not forget the energy sector's tug-of-war, as exemplified by the recent lawsuit involving Massachusetts' offshore wind farm. The project's developer is suing the turbine manufacturer to prevent them from discontinuing their partnership, according to AP News. This legal battle highlights the volatility and unpredictability of the renewable energy market, a crucial yet tumultuous frontier as the world shifts to greener energy solutions. Investors watching this space should note the potential for increased regulation and supply chain challenges that might disrupt plans, but also present opportunities for companies. Nike's recent appointment of a 20-year veteran as their new Chief Innovation Officer exemplifies the value of stabilizing forces amidst change. OregonLive.com reports that this move signals Nike's commitment to remain at the forefront of retail innovation, harnessing technology to optimize customer experience both in-store and online. Innovation in retail often sets trends across the economy, so strategic moves here can influence broader market movements, especially in tech-related fields. Before we wrap up, let's quickly revisit the crypto market, which has been on a bearish run with Bitcoin down 1.79% to $71,047.28 and Ethereum 2.85% to $220.27. These drops could be reactions to broader macroeconomic factors like inflation or regulatory crackdowns. However, for seasoned investors, these dips might present lucrative entry points. Remember, market corrections are natural parts of investment cycles, and sometimes the biggest gains come from the lowest dips. As we return to our burning question, who will lead the AI arms race? we see a fierce competition between tech titans and smaller, innovative startups. Companies like Tesla, OpenAI, and Google are racing to enhance AI capabilities while ensuring ethical standards. Yet, as recent events show, challenges such as cyber threats and legislative pushbacks are aplenty. The company that effectively balances technological advancement with security and ethical considerations will likely steer the future of AI development. In conclusion, today's financial climate is fraught with challenges and opportunities. Inflation threatens to squeeze consumers' spending power, while innovation in both technology and energy presents high-risk, high-reward scenarios. The landscape is ever-shifting, and informed decisions are crucial for riding these waves rather than being swept away. Now is the time to critically assess portfolios, stay informed, and adapt strategies to these volatile conditions. For investors, diversification remains key, and it's essential to stay agile and informed. If the allure of tech or the potential of AI fascinates you, or if you're more swayed by traditional investments, researching deeply and acting strategically is paramount. So, dear viewers, what's your next move in these turbulent times? Will you capitalize on the AI revolution, hedge against inflation, or find new opportunities in renewable energy? Share your thoughts in the comments below and make sure to subscribe for the latest updates and insights. Let's navigate this financial frontier together. Remember, it's not just about identifying trends, but understanding the forces driving them. The world of finance is an intricate dance of geopolitical developments, technological advancements, and shifting consumer preferences. Each of these elements can either propel your investments to new heights or derail them unexpectedly. So, taking the time to comprehend the bigger picture is as vital as the specific tactical moves you make. As central banks across the globe tweak interest rates and policymakers introduce new regulations, we must keep a close eye on macroeconomic indicators. Inflation rates, unemployment statistics, and consumer confidence indexes are not just numbers. They tell the story of the economy's health. For instance, an unexpected rise in inflation could signal increased costs for businesses, affecting profit margins and subsequently stock prices. Simultaneously, technological disruptions, especially in sectors like healthcare, energy, and transportation, promise to redefine industry landscapes. As AI continues to evolve, with its implications extending far beyond just tech companies, it stands to revolutionize processes and efficiency across various sectors. Understanding these broader implications can help investors spot under the. Finally, in uncertain times, it's wise to ensure that your financial foundation is rock solid. Reassess your risk tolerance, review your financial goals, and adjust your strategies to align them with the current economic climate. Are you prepared for potential market downturns? Do you have an emergency fund in place? These considerations are as crucial as the investments themselves. So, as we chart the waters of this financial landscape, let's remain curious, informed, and proactive. Your financial journey is uniquely yours, and by staying vigilant and adaptable, you'll be better prepared to seize opportunities and mitigate risks. Let's continue to learn, share, and grow together in this ever-evolving economic environment.